Everybody, it's Friday. It doesn't feel like Friday, I gotta tell you that. It does not feel like Friday at all. I just wanted to mention when I was talking with Lucian the other day, I was actually talking with one of our new members in the community too. Um, they had mentioned something that really got my attention. They said they were on YouTube and they looked for a review of the Bullish Bears, and I thought that should be easy. And the person had said, "Well, I can't find it. I wasn't able to find one." And I thought that can't be right. As a community and a moderator at the Bullish Bears, I have done reviews on so many places out there, and I thought, well, surely someone on YouTube has done one for our community. And no, there I couldn't find anything on YouTube. When I brought it up with Lucian, though, he said we have this review site here where people from the community have put in a review, and I thought, okay, well, that's at least as good. It's not on YouTube, but it is on our website. And it's something that I would highly recommend if you are on the fence about maybe coming over and giving us a trial, right? It's free. I mean, it's what the whole idea of a trial is. Are we worth your time and attention? And I was really lucky when I started trading. I found the Bullish Bears very early in my trading career. So I didn't bounce around a lot and I didn't pick up bad habits. Once you pick up bad trading habits, it's hard to get rid of them. So I've been very grateful for that. Uh, Check out those reviews. And if you already are a member of the Bullish Bears and you haven't given a review, why not share with people what you think? You know, it's also a good place to try to get some change. We get people all the time that offer insight and ask for content that we don't yet have. And that gives us ideas on creating new content. I am one of those content developers. And there are some days where I'm just sitting here thinking, gosh, I would really like to make a video. I just don't know what to make the video on. So that would provide, right, a little bit of insight. So give me just a second. Let me start the Zoom for everybody else. All right. So good morning, everybody. We have nothing on the economic calendar for today. Next week is a very full house. There are a lot of things on the agenda for next week, but it's New Year's Eve. Happy New Year's to everybody. There's nothing on the books. This is, a good time for reflection for me. A lot of you have been in our community for a long time. You know who I am, and you know the inspiration story that I carry around, right? New to trading, started in June of 2018. And by Christmas of 2018, I was a full-time at-home trader. I started with $300 and I had a full-time job and I was a full-time college student when I learned about trading. So, there's no excuses. We can all do this. We don't have to start with massive amounts of money to reach our goals. It's it's about staying on task, putting in the work, right? Being in a community where people help you out. Because like I said, I started at the Bullish Bears. And it was my first Christmas 2018 and my first New Year's in 2018 when I didn't have to wake up and go to a job outside of my house. And by 2019, I had not only replaced my income, I replaced my wife's income too. Man, that felt good. Right? That's what the entire goal was from the beginning. And if I can do it, anybody can do it. So you know, I'm sure everybody out there has heard how the failure rate of traders is really high. I've heard numbers that say 90% of traders fail. I argue against that. A trader is an informed person who is making an informed decision and researches, right? A trader has a plan. A donor, a market donor, is someone who has money, opens a brokerage account, comes in and thinks they can do some trading and then loses. Those kind of people have a 90% failure rate, but those people aren't traders. Traders actually have a really high win rate. They have a high success rate. They follow through in their chosen path, right? So be a trader, not a market donor. We did finally break that range. I'm kind of happy about that, really. We needed to get out of the box, and we are out of the box. Woohoo! Now, what are we going to do with it? So there is the idea of a Busby, right? And uh, for those of you who don't know the term, if you was just to search bullish bears Busby, you'll find it. I coined the phrase, but the pattern has been around for a long time. I just got really tired of saying this sentence that I'm about to say right now. When we have an area of resistance and price keeps breaking that resistance until finally it breaks out. When price does break through a resistance zone, it very often leaves the range, curls over, and comes back and tests that old resistance as a new support. It is also the beginning of a trend before we yet have trend, right? When we are transitioning from a range bound market into a trending market, it very often starts with this thing right here, where we break resistance and then we validate that old resistance as a new support. Well, that's a lot of talking when I could just say we're about to get a Busby, right? So I coined a name that goes with it, and I named it after this man, Busby. I was listening to one of his videos, and he was a grumpy old guy, way more grumpy than me, and he was literally screaming at people in the webinar. You know, it was like answering his own question. What does price do when it breaks out? And it was just, I mean, he was screaming at people. What does it do? What? It comes back and it validates that old resistance as a new support level. I named it after that guy. I've never met the man. I don't know if he even knows that I named it after him, but we have that setup forming right now, right? And it happens on any time frame. We see this all the time. Price does this, right? Frequently. Grimes wrote a book called The Art and Science of Technical Analysis, and he talks about this same thing in his book. Of course, he doesn't call it a Busby either, but he goes into the psychology behind it, right? Who's getting trapped, why this pattern forms, how we can take advantage of it, all these great things. And it happens all over the place. Well, we finally broke that range. And now that we've broke that range, it's very likely that we're going to come back and test against the bottom of this, and then we're going to continue to move on. Right? So that's what we're going to be looking for today. Now, the thing about pivot points, a lot of people believe that price is supposed to stop exactly right at the pivot. It should make you nervous if it actually does stop right at the pivot. We don't really want it to do that. Institutions drive price, and they want to shake out weak hands. I made a video on this not too long ago. If we're talking about something like a double bottom, if we're talking about something like a double bottom, us retailers would want price to come down, bounce on that previous bottom, and go. An institution, on the other hand, wants to make this move to the upside all by themselves. They don't want to share. So they want to shake out weak hands, and they want everybody to unload their position so that they can grab all of those positions and be the only ones in it. So they'll deliberately take it lower than the previous low. I'm not the one that noticed this, by the way. It was pointed out to me by the content on Investors Business Daily. So when I got a subscription to IBD, I was going through their content, and they have three main patterns that they really like to trade, and one of them is the double bottom. And they said a double bottom that they like to see goes deeper than the previous bottom. They want to see that because then it shows it really is the institutions that are making the move, not retailers. It was an interesting point of view that I hadn't really thought of before because I had always wanted it to bounce right at the previous spot. And when it didn't, I actually thought it was failing, right? I would assume that, oh man, it didn't bounce there. I guess it's not going to, do what I thought it was anyways. So when we are moving towards this black line today, and I don't know if we're going to get there or not, but a good Busby would come down and interact in this area, but it's not a single line in the sand. And like I talk about when it comes to trend lines, don't imagine you're using a very sharp pencil to draw a line. Imagine you're using a very fat, dull crayon to draw a line. Because when it comes to marking out support and resistance, it really isn't a single penny line in the sand, right? It's more of a zone, an area. And we always need to ask the question, why is price moving like that? Why is it doing that? Why did it go lower here? You know, where's the buyers? Where's the sellers? Where's the order flow that comes with this? And who's participating in this market? What is our expectation when we come up to these highs? Are there any trapped traders that are still here? Will they defend that level when we come into that area? Right? I wouldn't want to just short the high as soon as we get back up there. I'd want to see how we approach that high. Watch the tape, watch the dome, right? So that we can see those traders defend the level as we come into that level. That would make more sense. And then I can make a more informed decision about how I want to enter the trade. I will be streaming in the futures room today. We're going to be going through quite a bit of this today. Until then, though, what are we supposed to do with today's price action? Well, we finally left the range. So expansion and contraction, expansion and contraction. We finally are beginning to expand after contracting for a few days. The fractal energy indicator actually taught us something that we didn't know about the market before it came along. And what it taught us is how a market can actually build up energy. Energy is not necessarily a word we put in the market a lot, right? We hear things like inertia, momentum, trend. Energy was an interesting concept. When does a market gain energy and when does it burn energy? What we learned from this indicator is that there are times when a market makes a move with energy behind that move. And then there are other times where it makes a move and it burns energy making it. A fast, sudden shift or change in direction can increase energy very quickly. So we learned all of that from this indicator. Now, I'm not a person who trades with an indicator. This thing would never tell me go long, go short, get in, get out. I use indicators more like I would use a tape measure out in the garage. I get a tape measure, I measure something. When I turn an indicator on, I'm trying to measure something. With this particular indicator, I'm asking, is this thing moving with energy behind it? Or is it moving to get energy? That way, when we see a market moving aggressively towards an area of resistance, for an example, we can answer that question better. Is it getting into an exhaustion state? Is it running out of energy as it comes into that level? And what's the expectation when we get to that level? I made videos on this, by the way, and they're in the Thinkorswim Discord that I've developed. The link for that Discord is on the Bullish Bears Discord. So if you're in our community, you can go to that. Right? And what I did is I've collected indicators from around the world. And of course, I code my own as well. Any free indicators, because of course there are paid things out there, and I'm not going to do that, right? I'm not going to take paid indicators and put them in a public place like this. But there are over 2,000 indicators in this Discord. Some of my making, some from others, with scanners, chart setups, workspaces for Thinkorswim, coding logic to like learn how to put a label in an indicator or to adjust an indicator a certain way. And it's a free and public Discord. As long as you can get the link from the Bullish Bears Discord, you're good to go. And there's educational videos, including pictures of what the setups look like if you were to use this indicator for a trade trigger, which I do not. But if you were going to, then there are particular exact images of what a trade would look like, right? And just for a random example, a J hook with high gamma, right? And there's background behind that, but ooh, that just looks nasty. So we learned quite a bit about things with this indicator. As we come down into this level, we would want to be able to answer that question. Are we moving lower towards this level with energy behind it? Or are we moving down to pick up energy? And then, of course, what we're going to do after we get there has nothing to do with that energy. This thing isn't telling us, long, short, anything like that. It's just saying, well, how much energy is in there? How much gas is in the tank? This is a good way to say it. So we got that double bottom here, the little micro double bottom, and you can see it wicked just a little bit lower, right? Shaking out anybody who wanted to use a really tight stop and maybe use arresting orders, um, unwilling to react with the market, and instead was trying to front run the market. So we're in a very tight range right now. It's very unlikely we're going to be able to keep this range. One thing I ask all the time when I approach the market is, where are we going from here? What are we going to do next? We can't stay here, right? Like that old song. I don't care where you go. You just can't stay here. All right. Well, I do care. Where are we going? We can't stay here for the rest of the day. The range is too tight. So what are we going to do? Well, there's no econ today. We're basically flat. I mean, we're down, a dime, but that's nothing. We've still got an ADR of 1.4, and we've got, many hours left in the day. Where are we going to go? If we did break through the upside, we will transverse again through this range here. And sooner or later, we're going to have to do it. It more comes down to the wind behind it. It will be either a move that looks like this, which I find hard to believe. It will be hard to believe that we'll get a move like that because there's just so many areas of resistance through here. If it is a move like this, it's very likely going to be more of an impulse move. This lasted through the whole day. If it's going to be a fast move through here, it'll be like 3 candles big, right? It'll be just like a monster ripping rally that just cuts through all of that. Well, of course, that won't be subtle, right? It'll be in your face. Everything will be going off. Tape speed ripping. It will not be subtle, right? This impulse candle to the downside, that was not subtle. It would be something like that to get us through this area very fast. So it's unlikely we're going to move through that area very fast. And instead, it'll be a grind, a struggle, a fight to get through every single one of those pivots. But if we do get back above 47.70 today, the target would be more to the upside. And I would look to uh, fade the pullbacks, right? Just to be able to get my trades without trying to I wouldn't be in the ES, it'd be in the NASDAQ, make more money in the move. But that would be the play, back up. If we break to the downside, then we will deal with this Globex low from back here. It's very likely going to be a minor bump. I'm surprised it stopped there at all, to tell you the truth. And if once we break through that, then we'll come down and deal with the line that I have here, and then back here at the holiday area. 4730. That would be my likely scenario, right? For a downside move. And that also would not be subtle. It would happen significantly fast if we were to break like that. And that's because there's not really much here, right? There's no volume nodes. If we were to turn on volume profile, we would find that area to be very shallow, which means we're likely to move through it rather quickly. In that pullback where I said I'm surprised we even stopped at all, if you look, there was nothing here. What the heck did we hit? Why did we stop? What did we bounce on? Now we could turn on a moving average and maybe be able to answer that question. Maybe there was a pivot point there or something. But other than that, it's like, what? So what did we hit? All right, so for the NASDAQ for today, and I say the words for today because those of you who listen to my streams during the future stream, I swing trade. I swing trade in the futures just as much as I swing trade in anything else. But swing trading in the futures is for me based on a very clear setup on a higher time frame. I wouldn't swing trade off of this 15-minute time frame. I would day trade though, which is the really good thing about futures. They're designed for day trading. They're perfect for day trading. It's the perfect day trade vehicle. I actually reduced how much day trading I was doing in options when micro futures finally came out. They're very new. They haven't been out for very long. In the grand scheme of things, they've been out for less than 3 years, and the market has been around since before Columbus discovered this continent, right? So, trading's been around forever, and micros are very new. But when micros came out, I reduced the amount of day trading I did in options and started day trading more in futures because literally futures were designed to be day traded and options were never designed to be day traded. The NASDAQ today, we have this range. We are out of the bigger range. This range is a fairly significant size, but I really don't think we're going to stick in it, right? The idea would be that we're going to leave this range because although it is a good size for the NASDAQ, it's still not enough, right? It would be very surprising if we held here through the day. Now it is a 100-point range, and we have an ADR of 2%, which is a 330-point range. We're down negligibly, right? We're basically flat on the day. So we have the potential to move out of this box in either direction. We can be thankful or grateful that we finally did get out of the box this week. I was beginning to think it wasn't going to happen until next week. Yeah, I do love the NQ. It is a mover, and that fits my style of trading. Everybody that's new goes towards the ES because it pays more per point. And I get that. It makes sense from the outside. But as a person who trades every day, it's not per point I'm interested in. It's how many points, right? And how effective I can do that with the least amount of risk. So in the ES, sure, you can get $50 a point, and maybe you get, 5 points in one trade. In the NASDAQ, you only get $20 a point. My average trade is 16 plus points. So, yeah, you know, six of one, half dozen of another. We are outside of that range. For a move back up, it'll be exactly like the ES. That will be a struggle. We're going to have to bump and grind our way all the way through that, or it'll be a monster, massive impulse move like back here. 2 candles, maybe 3 will make the entirety of the range and we'll be out of the top of it. I don't expect it to do that, right? Let's just keep reiterating that so no one thinks this is supposed to take off like a rocket ship today. I have no expectations to see these kind of impulse moves, but I'm going to show you a chart here in a few minutes that says it can happen, right? So we want to be prepared for that today. A break to the downside. Well, we already tagged this low from back here. I mentioned the other day that if we did break, that was going to be what we bump on. We hit this one first here, and we hit this one here. If we happen to break through that, it's going to be the low of all of this, and that roundy, 16,300. That'll be my target for a downside move. Upside move, I mean, I'd just be impressed if we made it to 550. Right? So the chart that I was referring to is this. I have it up at all times when I have my machine turned on. Give me a second. I got to turn it back into a 15-minute chart. I was using Jigsaw earlier and adjusting my control settings. So this grid here has the 4 indexes that we watch: the NASDAQ, the S&P, the Russell, and the Dow. But then it has the 30-year bonds, the US dollar, and the VIX futures. Earlier this morning, the VIX futures and the dollar started to respond in the same way. And I've mentioned this multiple times that when it comes to the dollar, we can't assume that we understand why the dollar is moving just because we see candles move, right? Candles don't mean anything on the why. And there are times where global investors will pile into the dollar because they are fearful or worried and they want to, quote, go to a safe place. Our junk is better than somebody else's junk, and they'll pile into the dollar rather than going to cash. When we see them do that, it responds very similar to how the VIX responds when US traders want to uh, hedge or hide or go to a safe place, quote, quote, right? They'll go to the VIX. So when these two are moving together, it's starting to imply global risk, global fear, global uncertainty, that they're shifting their money into a safe place. So we don't want to see these two unify, sync up. Also, when it comes to the dollar making moves, we want to have a why behind it. When China started to really crack down on its richest people, those rich people took their money out of the country and wanted to put it into our market. Well, they had to buy our dollar to put it in our market, right? They couldn't go trade Tesla with their money. They had to do it with our money in our market. So they bid up the dollar earlier this year. And so we seen that move in the dollar as a positive, right? Because we seen that they were going to actually be putting money into an American market. But at other times when we see the dollar moving very strong to the upside and we don't have that why behind it, we don't know what the heck is going on, right? Why is it moving to the upside? Goldman Sachs has said in the last 5 weeks that there's been a lot of activity on the dollar because institutions are pricing in 3 rate hikes next year, right? So there is a little bit of that. Well, if they're pricing in 3 rate hikes, then why did we stall out in the last 2 weeks, right? We've literally just shut down, and then we had this major candle here. And then we've just been kind of fading back in that range. Right now, that's what we call the controlling candle. This is the one, this is the play. We don't want to see it break out of this thing. Now, I've been trading the dollar using the smalls since every time I tried to trade options on UDP, I just end up getting assigned. But I exited my dollar position and I'm probably going to sit out for a moment and see what we're going to do with this before I try to get back in again. So we're going to keep our eye on the dollar. That's a critical level, that 80, 95, 88, 87, 86, 85, right in there, right that low. We want to see it hold that. And for real, 95.5, right? I mean, that's like the last hurrah, the bastion of defense. We don't want to see it break that. So be watching the dollar today. Kind of, be aware we've been making some exaggerated moves, right? One-time framing, single direction traders, nobody went against this move, right? Not one single person was like, yeah, I'll go long. Thanks. I got it on sale. Everybody went short. Let's keep our eye on this thing, see how it impacts our markets, right? We're looking for um, correlation, asking the question, why is our market moving? Was it the dollar? Was it the bonds? Sometimes it is, and sometimes it's not, right? Sometimes these things move and nothing happens at all. And we think, well, that's weird. Nothing happened. We never quite know. But if I'm getting ready to get into a trade and I see that the dollar is just breaking loose and running like a mad demon, I'm going to not get in my trade yet and instead hold back and try to figure out what's going on. Right. That has saved me from trouble so many times. A lot of times it's just about avoiding risk. So we've had some extreme moves here in the last few days. Really keep your eye on it. And that's why I said if we did break up, we could very likely have that impulse move and make it back to the top of the range very fast. Because if either one of these break a critical level, we can see that today. All right. So kind of keep that in mind. All right. Next up, the sectors. You can see that we're kind of negative, right? In the last few days, we've had a lot of mornings where most of the sectors were less than a half of a percent. So on the positive side, that's still true, less than a half of a percent. All of these are just kind of wishy-washy, ambiguity, nothing really standing out. But when we start getting above a 0.5%, that starts to stand out. And it's energy and energy, right? And I know, hey, Sig, why do you have two different energies up there? Well, because I worked in the energy market for 20 years, worked on drilling rigs. When we talk about energy, we can't just say energy. What kind of energy? Exploration, production, drilling, transportation, green energy, oil, coal, renewables. What do we, energy. So I use XLE and then I use XOP. That gives a perspective of two different uh, sides of the energy. And you can see that we're down this morning more than 0.5%. If we do start to see those exaggerated moves in the dollar or the bonds, that's going to be a play on finance, and finance and energy has been very tightly correlated through the year. I'd be looking for a reversal play, something like it won't be a red to green because we would have already opened at that point, but a recovery, right? Um, there's something like a 3-bar play or the 3 black crows or the 3 black soldiers. You can look those patterns up. On the daily time frame, though, the outcome of those would be way beyond today. So we'd be more focused on today. A nice V bottom in energy would be good. There are plenty of cheaper energy names to play that on. Finance as well, but that would be directly connected to the move we see in the dollar or the bonds. And if we don't get that, I'm not going to be looking for a reversal in energy. USO had that nice pop on Wednesday too when the oil report came out, and there was a lot of talk about oil above $80 a barrel, and we're very likely just seeing that fade off after a really strong move up. Energy was the dog of the market for like the last decade, right? And then this year, and well, in the last 2 years, we've really seen that changing and coming around. I've heard a lot of places who ignore energy. They say, well, it just doesn't have the impact in the S&P that it used to have. Well, nothing really does anymore, right? The S&P is run by 10 names. If them 10 names sit on the bench, then the other names can actually have some impact. But otherwise, they're just along for the ride. Oops, that's sectors. You see the airlines are negative. The chip sector is not looking too bad this morning, right? AMD getting a little bump. So the reason I come in and do this after we just looked at sectors is because there isn't a sector on chips that I like. There isn't a sector on airlines that I like other than jets right there, right? Because like, oh, jets, they're down. But jets is kind of vague. And unless you know the markets that are in there, I'd rather just use mine, right? And be able to just go to airlines or crypto names. There's no, you know, uh, S&P 500 crypto. So I got to come up with my own, right? And that's where this comes from. These names that are in this crypto list came from the Smalls Futures crypto and names that have already publicly stated that they're heavy into blockchain or mining. So my list for crypto doesn't necessarily reflect, like the price of Bitcoin. But we got some pretty big movers in there right now. Mara, MSTR, Riot, all above 1%. Um, worth taking a look in that direction as well. Especially if we could get a red to red, that'd be a nice play. A red to green, an inside day trend line breakover. Those sound really good. The EV market really not looking hot. I think NIO was supposed to report today, right? They were supposed to report some production numbers. So that would be, worth taking a look at perhaps. We were all discussing NIO yesterday and kind of asking like, what's this bump from in NIO? Beautiful move, right? And that took it above the 10 and above the 20 on the daily chart. But if that's just a front runner, right? Buy the rumors, sell the news, then this thing's very likely going to dump today. What I'm going to be looking for is that line in the sand around 31 and a quarter. Want to see it hold at this old support here, right? This range, this old resistance, kind of a Busby, right? Break out of that resistance, roll over, bounce on it, validate it as the new support, and continue that move up. We are inside day at the moment because we faded off of those highs. And right now in the pre-market, we're still underneath the close, right? So it's a very large candle. Inside days with large candles are worthless. They're meaningless. What is important is that we're underneath two pivot points, the high and the close, and that it bounced off of a pivot point back here, the high of this day, December 27th. All right, I did bring up finance, so it's worth, stopping over there and just taking a peek. Nothing really here yet, right? Except Goldman Sachs, which is good because I've got a call in Goldman Sachs. So a little bit of wakery here. You can see it's just been a nasty mess, though, right? It really hasn't done a whole lot of nothing, which is why I've also got a short call uh, in a closer duration. That way, the short call is expiring, decaying faster than the back call. Finance isn't looking really too hot this morning, but since it's directly connected to energy, that makes perfect sense, right? There's been a lot of talk. Before I'll just click on it so it's loaded. Goldman Sachs has came out with their end of year stuff, right? And I know at the end of the year, everybody's publishing predictions and they're trying to show off on how good their last year's predictions were. Goldman came up with a little bit of a recommendation for the new year. And this recommendation is based a little bit on interest rates and how companies are, stuck with those higher costs, and how if a company can't pass those higher costs on to their consumer, then they're going to have a lower earnings, right? This entire Ponzi scheme of trading is all based on the company's ability to generate money, right? So Goldman recommends thinking about some consumer staple companies which sell everyday things, and that those everyday things can have a rise in price, so that the companies are passing along their costs to consumers. I know that sucks for the consumer, right? Sucks for us, but it doesn't suck for the company because then the company can pass on those higher costs. So they said focus on companies who can pass this higher interest rate costs onto their customers. Avoid those with a high workforce. And that, of course, is because of the rising wage, the whole battle that's going on right now, trying to, hire people. And then third, if you are looking at fast growing companies, avoid the unprofitable ones. That sounds very easy, but in theory, theory and reality are two different things. I do not have an economics degree. So trying to go in and crunch the numbers on a company's finance is not something that I can just do on a whim. I generally use things like the CFRA report, though that's a free report, or I'll go over to IBD and I'll look at their IBD metrics, because IBD is really focused on finance. To get a CFRA report, suppose I wanted to look at NIO, and we could go to product depth, or let's go across the top here, fundamentals. And from here, if there was a CRFA report, CFRA, you could download it right there. There isn't one for NIO, but the street has one, and you can download that. You can also just go to the Thinkorswim website and get CFRA reports as well. So I'll go to one that probably has a download. Yeah, there you go. Caterpillar. So suppose I wanted to buy Caterpillar, but I want to know more about their financials. There's a research team report that I can download, the CFRA, which is the one that I like to read, the street, which, I mean, it's okay. I'm not against the things that the street does, but I just don't like their report. Make sure you look at the dates though, right? Because I have found some that were not updated, and I thought, oh, I'm downloading, something really current, and then found out later it was like a month and a half, 2 months old. So just look at the date. It doesn't have to be today's date, right? We're talking about a company's finance, but it should be reasonably current. Okay, so that it's free. You can just download it, read it. It's right there. Cool, cool, right? No problems. All right, pot. It's a little down. We got a few names in there kind of moving around, but as a sector, I mean, it's just been, you know, a really great short, I guess is a good way to say it. Not a whole lot there to focus on for an upside move at this point. It seems like everybody's waiting on that legislation to really kind of manage the capital behind it, right? So it's a catalyst waiting to happen. Looking at the sectors like this, it's very obvious to me that we're not going to be able to use those sectors for our trades. We are really going to want to focus on our own watch lists. I made that high-low scanner. That thing is like the best day trade scanner I've ever come across in my life, and it's free, right? We didn't have to go out and buy a bunch of scan company products to get it. When you apply that thing to weekly options, you've got trades coming in all day long to trade. And if you're a day trader, one of your biggest hurdles is finding something to trade in a timely way, right? So on a day like today, we really have to lean on our scanners, not the sectors. Normally, I just go to the indexes, go to the sectors. Not today. This is the day where I say we have to be stock pickers. We have to use our scanners and our watch lists for opportunities. And look, there are plenty of names that are up this morning. Good names with weekly options that we know are liquid. And as a 0 day on top of it, we've got the indexes and all the big names that we can do the 0 days on. Amazon and Google are really, really great examples of 0 day products that you can make, a few grand in a very small amount of time. A 0 day is a trade, a credit spread that you are going to open and close today, a credit spread that is going to expire today. Now, the really cool thing about a credit spread is the amount of credit that you get is all the money that you can get, right? It won't make you more money than that credit. So when you go to open a credit spread, if you open it for $800 credit and it has a year of life, a year before it expires, the most you could make is that initial credit. You won't get more, even if you've got a whole year to wait. Well, if you do it for 6 months, it would still be the same thing. You won't get more. You're just waiting for 6 months. If you open it for 6 days, you won't get more. You're just waiting 6 days. Well, guess what? You can open it in 6 hours. And at the end of the day, however much credit you collected, you can close it and get your profit. So these 0 day plays are really great when you get these wild reversals and you're able to put on put credit spread down here and say, I bet you don't break that level by the end of the day. Now you can make that $1 wide, if it's a smaller product, not Amazon, you can make it $1 wide, or you can make it 50 points wide. A 50-point wide credit spread that is going to expire today, built at the money. You're looking at $2,200 credit, right? So then we're talking about closing that out at 50% or 75% profit, right? You're looking at $1,100 to $1,300 credit, and you didn't even need to catch a mover. I'm not talking about, momentum plays or catching the trend or finding it early enough in the day. I'm talking about putting on a credit spread. This is a $25 credit. That's $2,500 of credit. At the end of the day, if I held this into the close, I would make $2,500, right? But I don't hold these into the close. I aim for a percentage and I get back out. It's a 0-day trade. It will be profitable or not today. There's no waiting around and rolling the strikes and you're in, you're out. So 0 days. I have videos on that in the Next Level library. The criteria that I use, uh, some background, right? Days to expiration is simple enough. It's the last one. But where you build the trade changes where your break even is, what you need out of the market, what I call the ask. What are we asking from the market? We can shift that risk reward ratio depending on where we build the strikes. So that if we want, like a 2-to-1 or a 3-to-1, or if we want, a more neutral trade, a 1-to-1, just depends on where we build those strikes. So those are great because I get done in the futures before the bell. And then once I'm done with the futures, I'm day done. I don't need to come back in and trade them, which means if they don't offer me a setup, I'm not coming back. I will go trade something else, which means on a day that looks like that, I'm already day done. It stayed inside of this range. I'm very likely not going to trade this, right? Because I'm already day done. Now, that's a good example of where there was opportunity. But once it gets too late in the day, right, past power hour, I'm really not interested in coming in and trading past power hour. So yeah, we had some great moves in the afternoon yesterday, but it's past my window of opportunity. It's not that we can't trade it. It's just that I'm trying to avoid risk as much as possible, right? And when we reduce risk, then we have better outcomes more frequent. I picked up that risk from trading options and brought it with me into futures, but I don't see a lot of futures traders do that. Seek out ways to minimize risk. All right, guys, I think we've covered just about everything I want to cover this morning. We do have plenty of opportunities. I mentioned the 0-day. There's no econ events. Drop by the Bullish Bears. Sign up for a trial. It's free, a free trial, right? It doesn't cost you anything. Come in to the Discord. Give me a shout out. I am Signet. Let's talk shop. I love to nerd out on options, talk futures. I'll actually be streaming in the futures room this morning. And hopefully this afternoon, we will be going through and reviewing the live trades that we put on the other day in the afternoon, right? All those trades that we built off of the Dow watch list the other day. We'll be coming in this afternoon and live streaming any adjustments that need to be made, any closures that we got to do. And that'll kind of wrap up our week. So I'll see you all there.